Okay, good to see everyone. So we had a crazy week with Iran and the war that's breaking out, and oil prices have gotten hit. Our Yieldmax dividends have gotten hit. ULTY and MSTY have suffered. So we're going to talk about what this all means for my portfolio and my plans to stay retired early. We already earn over 800,000 per year in dividends, and that was over a million. But now it's at around 800 because I've been deleveraging and using a lot of my techniques from volume 7 to stay ahead of the market and also continue to live off my dividends so that I don't have to go back to a 9 to 5. If you need help doing the same, getting these kinds of dividends, using margin while performing in line with the indexes still year to date, email me for my e-guides at akintodd48@gmail.com or head to my website, Unconventional Wealth Ideas, where we're leading the FIRE movement with dividends and margin. You can learn all about my e-guides here. Okay, so a crazy week once again in the market, and we've seen our dividends fall as a result, not because of dividends getting cut, but because of our deleveraging. Okay, I talk all about that in volume 7, and again, that's what is so important about what's happening, and I'm so excited to share that with my members. Okay, what's happening in the market is we're seeing some chaos, and I love the chaos. I use the chaos to my advantage. Okay, this is how we got rich during the tariffs from last year. We took our account from 1 million to 2 million essentially over that time period, and it was thanks to how we used ULTY and MSTY and got away from Yieldmax and went into our triples, which again, that's what volume 7 is all about. All right, so that's how we made huge gains and blew away the market last year. We beat the market every year since we started YouTube, and this year I have even bigger plans to blow away the market. I know right now we're seeing some volatility with tech, but the truth is look at my margin debt now. It's 300,000. It was 500. It was even a million, but we've gotten it down because our dividends of over 800,000 pay it back in less than 1 year. Yes. And then your account grows by the equivalent amount, and then your debt falls by the equivalent amount. It's a beautiful thing. Your debt is gone, but your account grows. That's the beautiful thing about using dividends on margin, but that's not why our margin has fallen. It's fallen because we've delevered. All right. I delevered. And this is my favorite technique. No one knows how to deal with a down market, I don't think. I've been telling members, but they see the aha and what I do. That's why they all bought my e-guides, and that's why, volume 7 is so important. And we've been discussing how to stay ahead of this market, okay, and how to delever from some of these income funds, go into these triples, and we're actually going to lose less money on the way down and then make way more money on the way back up, more money than we can ever dream. I mean, I think I have plans to go to, we're at 2 million. I have plans to go to 4 million and then 8 million. And I know that sounds lofty, but all we need is 33%, okay? 33%. And you know why that's the magic number. It's not because that's when Jesus died and he was reborn. That's what kind of correction we need to achieve our goals, okay? Because with the triple, that's 100%. And so, I did this during the tariffs. I bounced back really hard. And this time, I'm not playing around. I'm going even harder into my strategy while keeping my allocations safe, okay? I have plans to actually delever out of ULTY some, even though I love ULTY. I have plans to delever out of it. Yes, I even said ULTY members. I know we have other names on the chop block that we could use so that we don't actually lose too much income. ULTY is our biggest income provider, but I don't mind losing this income because we lose it and then we get the gains back, okay, with the vehicles that we buy and the way that we buy them, okay? It depends on which triples you buy, and it depends which funds you sell from and then go into that are equivalent, all right? Again, all that's in volume 7. It's important that we take this a day at a time, but we want to sell from things that don't lose income, obviously, and ULTY would be our biggest income provider. So if I sell from this, what do? Well, we already have ways of getting our qualifying income with our dividends without dividends now. You do not necessarily need your dividends to qualify for loans and for me to get my house, so that's a plus. And welcome, Ernest, okay, welcome. We'll be doing some active videos this week. Don't worry, Ernest, and you'll see me I was hoping to maybe do another members only video tonight. This is for the public. All the public can watch this, but only my members can chime in here. And then we're going to do a members only, okay, hopefully tonight or tomorrow, for all members, okay? And so we all need to lock in right here, right now. All right, we're going to go more in depth into, the deleveraging strategy. So I look forward to seeing you there, Ernest. All right, and so that's how we do this without losing. Okay, we do this without losing and without losing much income, and we just get tax loss harvesting. This is with the big thing that we do here at my channel. Okay, it's with margin, and yeah, I use margin and dividends and I use qualifying income to get ahead, and we beat the market every year, and we've made some nice percentage gains, but I want to make true wealth. Okay, I want to take my account from 2 to 4 million, potentially 8. If we got a 66% dip, which we got in 08, that would be fascinating, because that's possible. That's also another key biblical number, as you know. But I'm not trying to talk about the Bible for this. I'm not using the Bible for my strategy. I'm just using math and numbers. And as my dad said, what I do, it's more of an algorithmic approach with my funds, with my holdings. What everyone else does is just helter-skelter, hope for the best. Let's try to talk in other Discords and talk amongst each other in chat rooms, and talk with family members and friends about what's happening. Hey, what do you think is happening, when no one knows anything? All you can do is focus on the price action, okay? And what we have with Iran is heavy price action, heavy volatility, and the indexes have suffered as a result. And you can see the S&P broke down below the 100-day moving average. So this is a problem, and everyone's talking about it, but there's nothing to talk about. No one knows what to say. No one knows what to do. You can only follow the math, and so you'll be seeing in my videos this week how we continue to size out of our income names and go into our other favorite growth vehicles. And you're going to see that we actually outperform in a down market, and then we're going to blow away the market on the upside. Okay, all of that's found in my e-guides. When you buy my e-guides, you get my number and Discord access for life. That's my chat room, the free chat room for life. Just remember, if you have questions, you can call me, okay? I've been saying on Discord, some members talk amongst themselves at Discord and aren't sure what's happening with certain funds. Well, you can just call me, okay? Don't forget, you have my number. You can call me, okay? This is another thing I wanted to point out over, at my chat, is just this change with Yieldmax. Hulk was sending me these charts, and the additions here to Yieldmax. Yieldmax is really going to help stabilize our account with these new additions. So I don't necessarily want to leave Yieldmax or ULTY, but I'm going to do what I have to do, all right, to make real money on the upside, to outperform the markets or stay in line with the markets generally in a down market, and then also to outperform in an up market. Okay, give me until the end of the month. If we have a bearish market and we continue falling because we broke this 100-day moving average, well, then everyone's going to be in the house of pain, but we're going to be in less pain, even with our margin, because this margin will be gone. This 300,000, 100,000 is short, and the other 200,000 will be gone in an instant if I need it to be. We won't take any losses except tax loss harvesting that we get to use for write-offs in the future, and we're going to get even stronger bounce backs. All right, and then I can just go back into ULTY whenever I want, because ULTY, these Yieldmax vehicles are not for the bounces, okay? You have to do it like I do it for the bounce and to get the most capital gains out of your account. Then we go back into the index dividend funds, okay, and then we like to do those near the top. And so then I just keep getting all that income, all the dividends. We still have over 800,000 in dividends that are funneling this 300,000. They're just paying this margin debt down so fast. I'll be in cash soon, and I won't know what to do with it. So I can just keep buying all my favorite dividend funds and growth vehicles on the dips. It's all about buying the right growth vehicles, and it's all about not just buying growth vehicles. It's about how you size out of your income vehicles into the growth vehicles. I cannot be more clear on that. And if you don't know how to do that at all, again, that's in Volume 7. All right? Volume 7. But you have to have the bundle to be able to call me, okay? At my website, you go to my website, you see the guides here. But if you need to call me and you want to go more in depth on the strategy, go, check out a bundle, a gold or a platinum bundle at my website. That gets you the number and Discord access free for life. I don't charge for my number, okay? It's a one-time thing, and then you have my number for life. All right, so, and again, take advantage of that, okay? I had a few members call me on Friday. I did not mind at all. That's what I'm here for. That's what this is all about. I'm really living and breathing investing. I've been doing this in front of y'all for years. Go check out my past videos if you don't believe me, if you're new to this channel. And so I just, I can't wait to lock in with my own holdings next week and really make these changes and improve if we get a market fall next week, guys and gals. And if we go higher, well, then we're gonna clean up. We're gonna blow away the indexes because of the way that we're positioned. You can see my portfolio at any time and all my moves at YouTube under memberships. All right, most members buy my e-guides first, so they understand what's happening, and then they go over to the memberships. All right, and you can watch my videos there again at any time and see how I get through this market chaos and how exactly we make millions of dollars, because I went from 1 million to 2 million. I started here with like 300,000 and then went to a million, and then we got to 2 million. Yes, I get loans and things like that, but I have to pay them back. So all that money is going right back out of my account. The way that we got these millions and the way that we've sustained it are 2 million, even in the midst of this huge pullback with tech and Bitcoin, even with my channel going basically flat and stagnant for the year and in 2026. Go look at my YouTube channel in 2026. I've had negative growth, okay? I'm losing subscribers left and right. I don't know who would ever leave me in this time, because I've gotten ahead of the market every year, and we're going to continue to stay ahead of the market this year. And again, not only stay ahead of the market, but we're going to blow away the market if we can just get, it doesn't matter. If we get a crash, you know how we're going to delever, okay? And you know that we have our short options and our short triples, which we're going to clean up on, okay? That's all in volume 5, of course, how I hedge. Of course, our put options might be up more than 2,000% like they were in the Trump tariff, times. We had one day where our put options were up 2,000%. Do the math on that. If we had enough in that and I hadn't sold early, that could have been over $1 million. But unfortunately, I kept trimming early. And now we learn not to trim the 0 DTEs. Let those go, okay, as we say in Volume 7. That's the update to my hedging. I kind of updated. Volume 7 is like not only a summary of all the e-guides put together, but it's how I use ULTY and MSTY and YieldMax to go into my growth vehicles. And it's also how I use my put options with 0 DTE strategies on top of the put options that add a lot more juice to the volatility on your options. You can make a lot more money with 0 DT and lose a lot less because you need a lot less money up front. So if we get this dip, we're going to clean up with our shorts. And even if we don't have shorts, we're going to delever. And so we're not even going to be invested. We're not going to be in margin. We're going to eventually be plus cash. And then we'll be falling less in the market because we're not invested. A portion of our cash, of our account, will be in cash. So that's how you actually beat the market. But we'll also have our shorts. All right. And then when we come back, we're going to clean up because of how we delevered. All right. It's a term that I coined, honestly. No one else, when you talk about delevering, you talk about unwinding leverage or something like that. I don't even mean unwinding leverage, because we could be in plus cash and I'm still delevering, okay? Delevering, okay? Not even de-risking, delevering, all right? And it's the way that I do it, okay? That, again, it's all found in the e-guides, okay? We go 3 for 1, okay? And so, hey, Nikki, hey, Sully, and if anyone's confused on that, again, just give me a call, okay? Please. All right, it's great to see all my members here. I can't wait to get to y'all. I just want to say one more thing, that the war in Iran seems to be a plus at first glance, because we have total destruction of our competition in Iran. We have over 90% of their drone capabilities destroyed. This is all given by the government, so I'm not saying that this is true or not. This is just the facts that y'all have all heard. I'm sure y'all have all heard the same thing. We don't even need to concern ourselves with the details in Iran. As I always say, that I don't involve myself with market emotions and what everyone else is saying in the other Discords or other YouTube channels. None of them, quite frankly, know anything. If you claim to know something, then you know nothing. That's Socrates, of course. And obviously, God is principle, truth, and spirit, Book of John. And so the only truth that you can have in the market is the market price action. The market price action is the true judge and jury, and how your portfolio performs as a result of the market price action. The S&P was down 1.3, okay, for example, on Friday. So it's how your portfolio performs in in comparison to the indexes. And we had some slippage on Friday because of ULTY, all right? And ULTY was down, 3% when the markets were down 1.5%, 1.6%, the NASDAQ. Why is that? Because ULTY experienced a perfect storm. And, again, what I was saying with Iran is we don't need to concern ourselves with these details. We just need to watch the price action. But I want to say with Iran that, things are looking so positive there that it's hard to really find a bearish case with this war, except oil prices rising, which they'll be coming down quickly once it's over. And Trump has given insurance policies to the tankers, the shippers, and they're getting escorted by the Navy. And now there aren't as many drones left to down any ships because 90% of the drones are gone. And we've re-engineered their drones. We captured their drones, re-engineered them. This is all just, I don't know, that I hearsay. I've seen videos, but who knows what's fake AI or what. So I just saw a guy, a general, a soldier, I'm trying to always be as truthful as possible. I saw a military member on TV say that they took the drone. Maybe y'all saw it too. They took the drones and they re-engineered them, the Iran drones, to where we're firing them back at them, and we're actually using much less money now to combat the drones. So we're not draining our stockpiles. We're not, losing too much money. So all of this looks like a plus with the war situation. But nonetheless, you could have, oil prices, drag higher, which hurts inflation, which hurts economies. You could, see China enter the war. And that's why we have our puts. We always have our hedges. We're always ready. And I honestly feel like the bias is higher in the market. Like we should be feeling more bullish about things. The bullish bias should be higher, but it's obviously dominated by Iran. And when bullets fly, it's time to buy, as they say. Every time I've been through some sort of Middle Eastern war, it's been a buying opportunity. Why would this time be any different? Because we have, potential for expansion, just like with the Ukraine war and Russia. But that never expanded, so we contained that, and we were able to climb through that, the wall of worry with the S&P. We have to have a wall of worry to climb. We can't just have all positive news to invest. That's when you should run. It's when you have negative news and you're going higher on negative news is when you should be encouraged. And so right now we're looking a little bit shaky. Look at the holdings of ULTY, by the way. These are not indexed per se. Some of these are large parts of the indexes, but look, the Russell was down 2% on Friday. The 2%, and the market was down 1% roughly. Well, SILJ, SCCO, and GDX, these are three parts of ULTY, top 10 holdings that are metals. And metals are a big part of the Russell. So honestly, ULTY fell because it was like a perfect storm. I was telling members on Friday after hours of tech and hypergrowth getting hit, small caps, Bitcoin, and gold and metals and precious metals. So all of them, this is where they all intersect at ULTY. Okay, ULTY is actually a great fund. Believe it or not, you look at the chart of ULTY and you see down charts, and everyone thinks that ULTY sucks, and they're just all misinformed because ULTY was beating the indexes this year. It was up 8%, 7%, just like the Russell was. It was following the Russell because that is the Russell. Go look at ULTY's true chart here on Morningstar when you factor back in dividends, and you see how it moves upward, left to right, as you can see here, okay? So it doesn't look like the chart on E-Trade because you have to factor back in dividends. That's what Cornerstone taught us. That's, why, we follow this approach with ULTY, because Cornerstone is the first high yield fund that I invested in to take my account from 15,000 to $1 million. Cornerstone 4-star fund moves upward, left to right on its chart there. But at E-Trade, you see that Cornerstone, like ULTY, moves downward, left to right, okay? All right, this is the S&P chart, but Cornerstone moves downward, left to right. Cornerstone's been going through its, premium volatility area here, like you call it a premium dump, which we talk about in volume 4 for Cornerstone, okay? And if you had just read volume 4, or if you had called me, you would have known how to get through this. We had lightened up on our positions all the way up here. We kept our position sizes small for Cornerstone because of the premium level that this was at. I've been saying this all along on my Discord channel and for my members, okay? But Discord's so crowded that you couldn't see my messages at Discord, so that's why we also have this Circle social media platform that you can find in my Discord chat room. You can see the link to Circle in Discord, okay, in my portfolio recap channel. So this is how you get to Circle, and so you would have seen this whole time how I've been dealing with Cornerstone, okay? I'm still getting messages on Discord like, hey, is there a rights offering for Cornerstone? No, we did not alert you of the Cornerstone rights offering announcement yet because it did not happen. All you can do is play it properly at these levels, which we talk about in Volume 4 of my e-guides, or we talk about in our YouTube videos or on Circle, okay? I've been keeping close watch on Cornerstone for everyone. And so here we did a lot of buying around this level, and then we did a lot of selling around this level. So I did a lot of buying here, 50 to 100K worth total for both funds. And then we did a lot of selling here, okay, 50 to 100K worth for both funds. And so this is how we're managing to stay ahead of the market, by the way. Right now, again, the NASDAQ has us by 1 basis point, but that's what happened during the tariffs last year. And the tariffs, we're down 1% more than NASDAQ for a brief period, and then we blew away all the indexes. And now we're going to catch up even more to the NASDAQ. Even if we keep falling, we're going to beat the NASDAQ because of my plans with ULTY to even delever from that, okay? Because that would take away, the way that it was down 3% on Friday, that means it was down 20,000 for me, or 1%. And to take that away, I could always get rid of half of ULTY and then get my performance to improve by a half a basis point. Okay, and then we just reload in our other favorite growth vehicles, and we're gonna bounce back harder than we even fell in ULTY and get all the tax loss harvesting. All right, we're gonna talk more about how I do that again in tomorrow's video, like if I do it or not. Okay, for members. All right, it depends on what the market gives us tomorrow. Maybe we delever out of a different fund, okay? We have to take what the market gives us, and I'm excited because we have options, okay? Some people say I overtrade. No, you don't have to overtrade or do anything for this strategy to work. You could just sit there and hold and go long, and you will win long term. I just like to maximize. Who does not want to maximize, and who doesn't want to have fun, as far as like bouncing back hard with the indexes and falling less than the indexes? It's like a little project I like to do. To just make money and be great. I wouldn't, it's not a little project. It is my life. All right. And so, I think that's why all my members here, stick with me, and that's why they all have the badges by their name, because, they believe in me, and I love y'all for trusting in me and believing in me. And so, Navy's right here in the background. I wish I could see her, but we'll do another video, soon. And you could say hi to Navy, another public video. But for now, I just want to lock in with my members, okay? And I know members in the public are watching, but I can't just stress it enough that we're going to make a ton of money in this down market should the market fall, because we're going to not only beat the markets on the way down, wait and see next week, but we're also going to, it's all math. It's all a function of position size management and math and margin to where we get our performance. It doesn't matter what the stocks do. We're going to get our performance. Just trust and believe in that. I can't wait. But if we go higher, obviously we're going to clean up because we have a lot of high beta. We have a lot of growth. Okay, we have growth from our triples. We have our triple C's, of course. Cornerstone's also another candidate that I believe in, like for another leg of growth. It's like setting up for a good spot, right there on its chart. But we also have hyper growth. We have Mag 10. We have Bitcoin. We have these other areas of the portfolio that, while they're not large parts of the portfolio, that's why we're not getting hurt. They're going to add extra oomph to our performance when the indexes rally back. Okay, we're going to do twice what the indexes are doing, in my opinion, and then we're going to do a little bit more because of our Mag 10 Bitcoin and Cornerstone plays. Okay, that's how we're going to get more, even more than the indexes. Okay, and it's not because of our margin. We'll be out of margin at this point if I need to be, and still beat the indexes. Okay, so we're going to do another video for members soon. Don't worry. With oil prices, I shared my view with that. I shared some of my view with the war in Iran, how we're doing. And I shared with you my plans to combat it if we fall. And if we go higher, well, then we just clean up, okay? But if we fall, we have lots of tools, lots of options available at our disposal to really outperform in both directions, okay? And all of that can be found in my e-guides or in my members-only videos on YouTube. Email me from e-guides, akintalk48@gmail.com, or head to my website, Unconventional Wealth Ideas, where we're leading the FIRE movement with dividends and margin. All right, so I'm going to get into the chat now and see if members have any questions. And I hope that, and I've just been pacing around the house, okay? I've been walking around, pacing. I've just been like foaming at the mouth, trying to let this market open so that I can go ahead and complete these plans. We either open up and we go higher and we just make a killing, or we go lower and we really start this deleveraging process. We've already done a good amount of it, but we're going to finish. We're not going to finish because there's always something more to delever if you need to, but we're going to really accelerate our deleveraging plans. And then plus at that point, we're going to have our shorts and we're going to have our hedges, our leverage shorts, our ETFs, and our put options. So I'm excited either way. Okay. We're all going to fall. Everyone's going to be in the house of pain. If there's a nuclear war, then there's no need to even worry about money. But if there's something short of that and we're all falling, well, then we're going to just fall less than everyone else. Our egos will take a hit momentarily, but our way of life will not change. We're going to continue to get dividends to pay down our margin, qualify for loans, pay our bills. Nothing will change. But then the bounce back, I expect to make more on the bounce back than before. When we bounced back from 1 million to 2, we fell briefly below 1 once. We almost fell below 2 million this time. But even if we fall back to 1.5 or whatever because the market crashes, we're going to make it back to 3 mil, 4 mil. You'll see. It's all math. And I can't wait to show you all that next week, okay? Get your popcorn ready, everyone. So Justin, Sam, Loki, thanks for being here, guys and gals, everyone. DC, good afternoon. Hey, Chip. Hey, Christopher, Frosty, and Jake. Thanks for all your help recently, Frosty, my admin at Discord. Happy Sunday, Jake. Jay Bizzle. Yeah, we don't know. If Bitcoin starts tanking, Frosty, then we're ready both directions. We have our shorts and our longs. We have a strangle on Bitcoin. Great to see you, Give and Justin. Hey, SL. Would you consider opportunities with oil or VIX trades, maybe DCA, buy puts on them, Jake? I'm staying away from that. We have some oil, we have some gush, but the bigger opportunities are here in tech, and we saw a stealth rally in the world, in the rest of the world, when tech and Bitcoin were down. The rest of the world and the rest of the stock market were on fire. Now it sort of seems like it's reversing, and tech starting to have a stealth rally one by one. Netflix and Palantir, okay, and I think that we could actually see maybe a stagnant market or something. But we're going to start outperforming because of how we've positioned into our double mags. Right, Jake? And so all my bets are there. Obviously, we had massive gains in our value plays and our oil plays that we had recently, like all of our metals plays. We're up huge, but now I've taken my money and I'm focusing away from value again into our favorite growth vehicles. And once again, welcome, Ernest. Okay, here if you need anything. Yes, Silverliner, IGV and BTC, they do have a correlation. All right, not entirely, but of course, anything hypergrowth is considered risk on. When Bitcoin falls, it's risk off. Yeah, of course, Joseph, I'm always consistent in my videos. You can always refer to me, Joseph, because I live and breathe this stuff. Other YouTubers, I don't know, I don't even watch them, but I can only imagine what they're doing right now. Just if it's from anything that I know from some YouTubers that I know, and friends and family that I've known my whole life, investing for over 20 years now, they're all just, guessing and talking about nothing really. And they need to just be focusing on the numbers, their position size management, their allocations, and their bounce back potential. They need to focus on volatility reduction at these levels and then bounce back potential, which that's what we do here. And that's why we're going to stay ahead, Joseph. And that's why I love it, because it's fun staying ahead. Exactly, Frosty. It's not always a one-for-one, but generally risk on Bitcoin and software stocks and hypergrowth. Bitcoin and risk on things have similar patterns. Okay, anything that's risk on. But of course, like Bitcoin, software names, they will have a mind of their own. They're already starting to rally, for example, when Bitcoin is still kind of struggling because of the whole Clarity Act and things that are going through with on the political side with Bitcoin right now, getting that bill passed with stable coins and all that. It's interesting to see what's going to happen. But we keep Bitcoin so small, it doesn't matter. Everyone else who was using heavy Bitcoin and heavy ULTY and all that, well, they paid the price. And we kept saying, stay in the indexes and keep those small. Thanks to all my members, for sticking with the script. Hey, Sandaviz, I hope I said your name right. Just saying VLS. I'm gonna say, hey VLS. Hey Jeff. Once again, if I didn't say hi to you already, Jeff and Tom, great to see y'all. Denali, how much external debt outside of the margin do you carry? I'm curious what sort of monthly debt service obligation your portfolio carries. Yeah, it's about $15,000 a month, Denali, just from loans alone, which I even have been not defaulting, but not paying back some of those loans with the same velocity that I've been paying them back before. So that's why it's 15, but it was upwards of 20 to 30K per month, Denali. I mean, I have serious loan obligations here, but none of it's against my credit, which is good. A lot of it is like, I told you the IRA loans, margin loans, SBA, which I don't know, that doesn't seem to be affecting my credit. Working capital loans. JG, the Bible is always a good thing to use in all decisions in life. Amen to that, JG. God bless you too. SL, speaking of buying the dips, I bought dips last week and you're in the green. Yep. Well, when semiconductors and tech pulls back, dips will usually work because that's the inverse for NVIDIA, of course. Great to see everyone here today. Hey, Nikki, great to see you in Sully once again. Yeah, you saw the video. I figured you had, SL, about the reverse engineering of the drones. That's so cool. Right. I know we're all on the same wavelength. That's what scares me, SL, is that we all, see the same news, right? So I always try to find my pockets of truth and dislocations in the market away from the news so that we can, take advantage, and right now we see what Fox is saying and all that, and it's important just to watch the numbers, our position sizes, and our performance in relation to the market indices. Hey, Kermit, let's stay retired, brother. Let's do it, okay? I guarantee it, all right? Unless the market crashes in itself. And if it does crash more than 66% or whatever it is, we're not going to lose because of margin or Yieldmax. We'll just be in the indexes at that point. So, at that point, money won't matter, Kermit. But I think that that's a worst case scenario. So therefore, we're going to continue on this path, Kermit. Onward and upward, brother. Sam, let me know what you're going to say. Bro Hannestein, I'm doing well. Hope you are too, Bro Hannestein. Justin, yep, get that popcorn ready. Yep, I'm passing it to you, brother. Hey, Amir. Thanks for all the comments today, SL. Frosty, options premiums on anything on oil are high. Yeah, very easy to get burned. So true. You have to be careful. That's why when we're buying our puts, they work in our favor. The options spike in our with that kind of volatility, but we watch our position sizes. We clean up on the upside, but we don't lose much on the downside. That's all volume 5. Frosty, maybe try oil D for better R&R if you want to short, right? You have drip. You have drip, you have dips, you have oil D, you have Doug. Sam D, Todd, can I sell at least, can I do stop losses, set stop losses? I don't like stop losses, Sam D. We'll talk more about that on Monday, okay? Check out Monday's video right at the open. I think I'm going to be there right at the open, depending on if the market's crazy. If it's not crazy, maybe it'll be like mid-afternoon. And then just follow what I do there, Sam. And if you have questions after that, call me, okay? So anyways, I love y'all so much. I had a great time, all right, just being able to articulate my thoughts on the market. The macro picture is strong. Jobs are strong. GDP is 4 to 5%. The inflation is low. Mortgage rates went below, 6%. This is all extremely bullish. Interest rates are low. Inflation is low. This is a Goldilocks economy. We just have to make sure that we're watching our position sizes, watching our diversification, our portfolio mix, our allocations. Okay, these are key words, and you can see my allocations anytime on YouTube on my wall under memberships, or again just you can, if you have my e-guide, you can call me anytime if you have more questions on my allocations or holdings. Okay, all right, I love y'all, and I'll see you on the next video. Okay, take care, everyone. Bye bye.